Well, I welcome everybody back. To be honest, I don't know where to start. We have a lot to go over. And obviously it's been a minute since I've made one of these. There's a few reasons for that. Biggest reason is I had winter break and I went home and I left my recording software here in California. So, I just chose to take it easy, spend time with the family, trade a lot less aggressively, and it was nice, taking a little break, but obviously we are back on the grind. And so, without further ado, let's jump right into a lot of stuff. And you know what? I need to get baked. Hold on. Tasty. Oh, I forgot how fun this is. Let's do this. Let's go to Trading View, and let's just go from the top. And so here's what we're looking at. And today was actually a very important day, which you'll see why in a minute. So obviously, looking back at our move from about a year ago, that marked the first wave of 5. Right, 513 down to 30-ish, 1-2. That's a given. We know this. This has been established for a year now, actually. But what's going on now is we're actually finishing the corrective wave 2 within this, if that makes sense. So, right within the yellow degree 1, 2, 3, 4, 5, we have red within the yellow. And so this red 1, 2, 3, 4, 5 ends up creating the larger wave 3 in yellow. And we are still finishing this wave 2. In the simplest way possible, this is what we're looking at. I'm going to go back to Thinkorswim because I don't have the better version of whatever it's called, Trading View. Right, so we have obviously 1, 2, and then within this, right, we have another 1. But here's where it gets interesting, right? 1, A, B, and C. And then with this C, that makes the larger 2. And so I've been talking a lot about this 108 level, and where that comes from is something called an Elliott wave flat correction. And so in essence, the flat correction will look like this: move down, move up, double top, and move down, double bottom. And the subdivision will look like 1, 2, 3, 1, 2, 3, and then finally for the last leg it's 5. So 1, 2, 3, 4, 5. And I think we're right here, if that makes sense. And so now let's dig a little bit deeper. Let's see how these numbers line up. So first of all, right, wave 1, if we look at that as the 1, and this is the wave A down, we'd expect this move, obviously just visually we have a double top, but for the sake of the analysis, let's measure, right? 1 to 1 comes out to, obviously, right here. We fell a little bit short, but it's plus or minus $5. It's about 2%. Who cares? Lines up. Then finally, we'd expect 5 legs down, forming more or less a double bottom, but because this formed a lower high, this should form a slightly lower low. And so finally, we'll measure move down to the move up, and we'd expect 1 to 1 at 1. Actually, I need an hourly because we did wick a little bit lower, but we take the hourly levels, right, from the high in March to the low on earnings to the high in June. 1 to 1 comes to 108.99. And where do we close? Do we close below it? Okay, yeah, see, this is a bearish signal. If today would have marked the low, what I would have liked to have seen is on a 4-hour or 1 hour, whatever, we would have wicked below, but every candle would have closed above. And so this is basically the same thing that we had happen last week on Friday, I believe. If we're looking closer, right? See, we wicked below, but we didn't close, and that was a sign, okay, down selling isn't done yet. And obviously today we open and we come down more. I know this is rough for people to sit through, and people accuse me of being a shill, whatever. Here's the thing. When I put my stuff out, it is completely unbiased. I just put out what I like to see, and I act on it, right? Many people know that I do like to trade covered calls just because I have a huge equity position. Why would I not try to make money off of this as it's going down, right? And I'm not selling my shares. So what I do is I like to sell calls usually at a point of rejection that I've outlined, but I'm going to run you guys through a few of the trades that I've made recently. So I actually opened covered calls on this Thursday at like, I think I opened them at like 135. We closed like 132. I was already up a lot of money. And then obviously we had the fake news of the marketplace and market opened. I was sweating a bit, but I like played out the analysis and I wasn't really that scared. But anyways, the calls went from being like plus 75% to minus 3,000%, and they closed at a plus 100%. Then from there into last week, I think I played it twice. I don't remember exactly. Oh, right. I shorted calls here, closed around here because I was seeing a lot of call flow coming in, so I anticipated some sort of leg up before continuing down. We continued down. I wasn't in a position, but when this happened, I was like, you know what? Obviously the selling isn't done, and we took out a critical low right around, I had retracements up. You know what? This doesn't really matter, but what I'm trying to say is, there's no shame in making money on this as it goes down. And there's such a stigma that says, oh, you're a short seller. You're not a real holder if you make money when it goes down. Bullshit. If you want to make money on this, who's to say you shouldn't? You know, it's your money, and people that like hate on other people's financial decisions, I don't understand that. It doesn't make sense. But anyways, now that we have that out of the way, I've explained the subdivision. Let's go back to this one more time so you can see what we're looking at, right? 1, 2, 3, 1, 2, 3, 1, 2, 3, 4, 5. Keep that in mind. Now we're going to go back to trading view. Now look closely. This is very interesting, and it took a while to come up with this, but it makes sense, right? So hear me out. However you want to subdivide this, doesn't matter. 1, 2, 3, 4, 5. It's there. And then from there, you have ABC, and 1, 2, 3, 4, and finally 5, which is almost done. But I'm going to break down the subdivision a little bit more now. This is more or less like a recap of the Reddit post I made like a month and a half ago. Shout out to you if you read that. But this is just what it looks like when you actually do the process out. So, obviously, in the first leg of the flat correction, ABC, we'd expect an ABC subdivision, so 3 legs. So this is the first leg down. This is the day in March. I actually called this before it happened too, which is crazy. But 344 down to 172, up to the next high, 1 to 1. Boom, that's the low right there. That's your A leg. And then again, this part's a little weird, but A up, B down, and then C, in this case, was actually a 2 to 1 extension, which uncommon, but you know, it happens. We can't ignore it. And 2.0, bam. 344.21, the exact level we hit was 344.66. 40-cent difference. Think about it. And then finally, 5 legs down. And I'm going to go back to trading view so you can see the subdivision the way I've labeled it. So the day we hit 344 in June, and we sold off pretty hard, that marked the top of the impulse, and we began to sell, right? First leg down 1, and then 2, and then this already starts to subdivide. 1, 2, 3, 4, 5. And the reason I have the 3 like this is because wave 3 can't be the shortest. Where was I? Sorry, I just got lost. So you're 1, 2, and then the third leg obviously is going to be comprised of 5 legs. So 1, 2, 3, 4, 5 into 3. 4 is going to be ABC. And again, we're looking for the same sort of relationship that I showed you earlier, where A and C are equal to each other at 1 to 1. And I remember when this happened, this was a thought in the back of my mind that it was possible, but I didn't see it as super probable. And obviously, you know, hindsight is 20/20, but hear me out, right? If this move marked the A up to here, B down, and then C should equal A. Boom, right there. There's your tick. And so finally, if that's the 4, we'd expect 5 more legs down. 1, 2, 3, 4, 5. So we're almost done, but not 100%. And this is where you have to dig in really deep to see like very exact levels where we could turn. And the process will look a little something like this. So if you're 1 down and 2 up, 3 should be at least 1 to 1. But this, I have 3 done it here. Is this a 2.0? This might be a 2.0. It obviously doesn't matter, but yeah, see, there's a 2.0 right there. 3, and then this part stumbled me. Remember when we had the that Thursday, I think it was like a week or 2 ago, where we went from 120 to 175. This definitely threw a lot of people off, but I had to look close because I was like, something about this doesn't add up. Who the fuck is calling me? If this marked the 3, we'd expect A, B, C into 4. Now normally ABC, when we think ABC, we think zigzag. And so if we're looking at like a wave 4 to the upside, it would look something like A, B, C, right? That's a typical zigzag, but the formation we saw is something called an expanding flat, which is actually similar to this, except the only difference is this leg, or actually that's going down, so scratch that. It's what it'll look like instead is we'll have a move, or it'll look like this, right? B comes lower than A, and C comes above B. And then we continue 5 legs down. So remember that shape, right? Now we're going to go back, and we're going to do some ratios. And what we see is, so if this is A up to here, we measure A. And if we look at the ratios, B takes pretty much the 1, 2, 3, 6. Not exactly, but pretty close. And whenever you see that, that's a signal to expect either a running flat or an expanding flat. And so the ratios there are, running flat target would be, hold up, give me 1 second. The running flat target would be the 1, 2, 3, 6, and expanding flat would be would be the 1, 6, 1, 8 at 174. So boom, we take the 1, 6, 1, 8. Cool, that's cool to see. But then you dig deeper. So we have one signal that shows us we have a potential expanding flat in play. But then another very important trait is wave 4. It's a lot less steep of a retrace, meaning, right, your wave 2, it tests the high or the low that you're looking at. But wave 4 doesn't come close. And so what you'll do is you'll measure the retrace from waves 2 to 3, and you're looking for a 0.3 at 2 tick, and then boom, literally to the tick, 175.17. The exact level was 175.5, or 175 on the dot. So again, that's a signal to expect 5 more legs down to complete the movement. And then finally, I need to go to the alt because this is technically the prime right now. And then we'll subdivide this a little bit more. Here's what we're looking at. It's a bit iffy, but hear me out, right? 1, 2, 3, 4, and then finally, again, right, fractals. Let's look at this again. Same thing. Boom. And that's where open covered calls, actually. See how that works? And then we kept selling off. But finally, what we're going to do is, there's 2 ways you can look at this. So for one, we'll look at this 5-leg move down, right? Waves 1 to 3, up to 4, we're looking for 0.618 to 786. That gives us targets respectively. Oh, you know what? Let me just go to a different layout so you can see the process. Again, right? 1, 2, 3, 4, 5. Almost done. So wave 1 to 3, up to 4. And that gives us targets of 102.8 and 93.5. But that's just the final leg. Now we have to look bigger picture, right? We're also looking at this entire 5-leg impulse. So waves 1 to 3, up to 4 gives us targets of, let's zoom in here, 95.82 on the higher end and 74.29 on the lower end. Now, I've talked about this a little bit, the 74 target, but the reason I don't see that happening is because there is a lot less confluence of levels, if you see what I mean. Like, if we pull up even just super basic level technical analysis, we look at a monthly, we have a demand zone, support, whatever you want to call it, like 100 on the dot. And we can see that by the way these candles are set up, and I have the little red line to visualize that. But then you look at all the targets that are set up when you look at all the varying degrees, and the most probable outcome to form the low of this entire corrective sequence is this green box right here. Right? It's just because it becomes a process. It becomes a process of elimination. And obviously, it's awesome to see we finally hit this 1-to-1 level where A equals C at 108.77. And yes, this could very well be the turning point that we're looking for, but we need confirmation, and we don't have that yet. So it's just a waiting game as of this point. If we keep selling, these are the levels to watch, and the outlier being this 74. Let me clear like everything else because this other stuff doesn't really matter. Yeah. These are your bounce levels here. And then from there, I have it visualized on TradingView because I do like run a little Discord where I help people trade GameStop. I never publish this though. I hate being the guy who's like, buy my Discord. But anyways, this is what we're looking for. Some sort of movement like this from the low, right? I move up and I move down, a very sharp move down, but we make a higher low. And that's when we begin to finally break up. Time frame for this, I don't know. I really don't know. It would make sense to like end this corrective sequence this week, and maybe like keep selling into Friday and then begin uptrending next week. I will happily be wrong. I'm currently positionless. I closed my short calls today. If we do keep selling though, here's what I expect. How did I have this laid out before? If we look at this as something like 1, 2, 3, I'm not even going to try and subdivide it. Similar idea. So then finally you take the retrace from the high of the 4 down to this lower degree 3, and right? So see, we had a 0.236 rejection. You'll see this for the A leg pretty often, right? A, B, C up to the 0.6 or up to the 0.382 at one. Let's just say 117, and finally from there, right? Extensions. This is just hypothetical if it plays out like this. If you come up to 117 and reject, then that gives us more targets at 97.6 and 92.3. So you can see that the majority of the signs are telling me, okay, low to mid 90s makes sense to bottom. But obviously I don't know. I think I've covered about everything though. My camera's about to shut off because this has been going for so long. But if you stuck this far through, shout out to you. Let me know if you guys do want more of this. It's like kind of a bitch to do, but it's not that bad. I'm just lazy. But with that being said, I should probably go to class. So I'll catch you guys in the next one. Peace.